All's good in the market world.
Yeah, this is one of those interesting moments, and they don't happen all the time, where it almost doesn't matter what you own. You could own value, you could own growth, be making money in either one. Small caps making a 52-week high. They're still below the old 18 highs, but they're on their way. Banks have just broken above the 07 highs. All the mega cap banks look incredible. Tech is up 48% year to date. And now you have Europe up 21% year to date, going almost vertical this morning. I put a chart up this morning from my friend John Krinsky at Baycrest. Europe is coming out of a 20-year base, has done absolutely nothing in 2 decades on price alone in the stock 600. Now you got those stocks working. So, people always say, well, be selective, or people say, let's take a little less risk this year. Volatility is down 40% on the year. If your big bet was vol, you got killed. If you bet on almost everything else, from bonds to stocks, you made a lot of money. And what you're seeing right now, Scott, is the end result of that. People who have trailed the market, people who have been cautious, they're looking for something that hasn't done anything yet. And the best evidence of that, even energy, on a relative strength basis, energy right now is pushing. I've been talking about Halliburton on the desk over the last few weeks. Pretty obvious breakout there. So when you have energy now making its move at the tail end of the year, you know exactly what's happening. It's catch up, and it's people looking for the thing they'll look less stupid for buying now on December, whatever it is, 15th.
Yeah, Bryn, you got all 3 of the majors hitting new highs today. Dow, S&P, NASDAQ. The notes are passed around. Bank of America, market primed for a melt-up in Q1. You get Brexit and trade. Those risks have receded. The Fed's out of the way. Is that how we should all view where we are?
Well, I think it's really important for investors to take a step back and view this time last year, in the fourth quarter, the S&P was down close to 20% peak to trough. Everyone was worried about the Fed raising rates too much, and then fast forward 12 months. And to Josh's point, pretty much all markets are up double digits. Tech up, to Josh, 45%. The Dow and S&P up plus 25. And so I think it's really important to remember, as investors are thinking about 2020, is that time in, not timing the market, is really the key to enjoy good returns. And, people that read too much into this time last year just missed a wonderful year. In years like this, you got to earn these years. And so I think, the note that we're going into a good first quarter, I don't think that's much of a stretch. I just think if you continue to have this positive momentum, and if you look at all that the Fed is doing, the Fed stepped back into the market in September of this year in the repo market. The ECB is continuing to increase their balance sheet. As long as the Fed and the ECB are going to continue to be accommodative, I think the markets have room to run.